Do you want to buy a $1 million business for just a 1% down payment? Do you want to learn how? I'm not talking about the no money down or no money out of pocket. That's a myth. In 25 years, I've never seen a business owner sell or give a business to a buyer with 100% seller financing or 100% earnouts. I'm talking about buying a good, profitable $1 million business, buying it like the big M&A firms do, and making a professional offer, not an offer that will get you rejected. Yeah, that's why you're here. But here's the thing, 97% of people that start out to buy a $1 million business never do. Why? Because they don't have the money for the down payment, which is usually 10% of the purchase price. A $2 million business is going to take $200,000 down payment. I know what you're thinking. John, I don't have that kind of money just lying around. And you're right, most people don't. But I'm going to show you a group of people who do. They're called high net worth individuals. Now, what are high net worth individuals? Well, they're not VC firms, venture capital firms, or private equity, or hedge funds, or family offices. These are ex-CEOs, VPs, retired, maybe not. They own a small business, they're doctors, attorneys, they're the millionaires next door. These are the people who have the money to invest in businesses, and they're always on the lookout for good deals. They've been there, done that. They may even see themselves in you. And they don't want to run a company or manage people. They just want their money to work for them. So why not learn how to find them and to tap into their money pool? Most business buyers don't know how to structure the deal in a way that's attractive to them. Let me give you an example. Here's Shark Tank. The entrepreneurs walk into Shark Tank and they say something like, "Hi, my name is John Stoddard, and I'm seeking $180,000 in exchange for 14% of my company. We'll offer a 10% dividend, and you will make all of your money back in 5 to 7 years." Okay, let's try it yourself. Let's say you find, that's an important, you find a good business, it's on market, it's a motivated seller, and they have a rational price. It's doing $2 million in business, earning $600,000 a year. And you only have $20K. Let's say we're going to bring the SBA in because the Small Business Administration wants you to borrow money to buy a business. They say you need to put 10% down, which is $200K. That means you need to raise $180,000 from outside investors. So you're going to use the debt from the SBA for the other 90%, or $1.8 million. Right now, the interest rate for SBA loans is 10.5% for 10 years. That's $24K per month, or $288K per year. If you find investors and they come in with $180K, you could potentially own a business that, after SBA debt, have earnings of $312,000. So, what do these high net worth individuals want? Number one, most investors will be looking to earn a 1.5 to 2x multiple on invested capital. MOIC measures the returns by comparing the value of an investment on the exit date to the initial investment. If I put $1 in, what am I going to get out in 5 years? And number two, they also look for a dividend. Dividends are regular profit-sharing payments made between a company and its investors. It's very common to see investors ask for 10%. You also want to offer the high net worth individuals enough equity that they're going to achieve their desired return on investment. But you can't offer them too much because A, you will harm the company's profitability, and B, the investor is unlikely to want to go through SBA's personal guarantee at 20% ownership. It's a financial proctology. They just don't want to do it. What else are high net worth individuals concerned about? Well, how do they get their money back? You can offer a put option that exercises at 5 to 7 years. A put option is a contract giving the investor the right to sell their shares at current market valuation. So here's the benefits of bringing in a high net worth individual to the deal. If you bring one of these individuals to the deal, it's going to allow you to purchase a much larger business, maximizing the profit, which means you could bring on a general manager to run the business. And at the end of 5 to 7 years, if investors exercise the options, you are now the majority owner of a $2 million business from a 1% investment. Congratulations. So that's what Deal Flow System does. Shows you how the big acquisition firms do it and how you can do it too. I could show you how to find, fund, buy, and scale a $1 million business. Have a look at the course and the lessons below and choose a plan that works best for you.